What up? It's your boy, the rapping CPA, Petty Cash, Drew Carrick. I wanted to make a video about common tax misconceptions. We're in the heart of tax season right now, so taxes is the big buzzword. Right after PPP, SBA, loans, stimulus package. So misconception number one. A lot of people think that having more money is bad when it comes to taxes. I mean, you're gonna pay more in taxes when you make more money, yes, but it's never a bad thing to have more money. And a lot of people can't wrap their heads around this, but there's people that have actually said, no, I don't want the promotion, I don't want the bonus because I'm gonna get taxed more. It's gonna put me into a higher tax bracket. First of all, only the money that puts you above that threshold is going to get taxed at that higher amount. And second off, making $5,000 more and getting taxed on, even if they take, say, half of it for some reason, you still have $2,500 more than you had before. So unless you think that the work you're doing is not worth that amount, take the promotion. People think that, oh, if I have another kid, I'll get an extra deduction. I don't know, does the extra couple $1,000 deduction or exemption make it worth actually having to have a kid to take care of? Because I think a kid probably costs a lot more money than the tax deduction. Oh, I'll just give more to charity to lower myself. Again, that's fine. I think everybody should give to charity. That is terrific. But no, it's not going to help you actually have more money at the end of the year. You spent more money on charity than how much you're actually going to get back from that deduction. So you make that decision on your own. Some people say, oh no, I don't want to win the lotto because I won't have to pay taxes then on the money that I won. Again, same thing. Having more money is never a problem. You're never going to have less money because of making more money. Number two, I need an accountant to do my taxes. Let's be honest. I've had a lot of people come to me and say, hey, I need help with my taxes. Can you help me out? And I look at what they have and it's pretty simple. Most of them have just a W-2. They're all taking the standard deduction. And they maybe have a few assorted 1099. You don't need a tax accountant to do that for you. You don't need a CPA to do that for you. You can go on TurboTax probably and file for free. If all you have is a job and maybe you get a little bit of money from your savings account or from an investment account, you can do this all for free online. And even if you don't want to use any of the tax softwares, you can just use the online portal that most states and the federal government have. I'm not saying this to put accountants out of business. I'm just saying it's not worth paying the amount that you'd have to pay to justify having an accountant do it when you can just literally do it for yourself for free. What I will say though is it is worth having an accountant if you're actually trying to plan for a better tax future. Having somebody just to do your taxes, that's just data input. You can do that yourself. But having a tax accountant who is good at financial planning, or they're partnered with a financial advisor or a wealth management firm, now you're getting into actual tax advice and tax planning. That is valuable. That is something you absolutely should pay for and you absolutely should find. But when it comes to just filing your taxes at the end of the year, usually they'll do that for you. But if all you're looking for is somebody to file your taxes, just do it yourself. Number three, a bigger refund is better. Not true. Everybody thinks that getting a refund is great and they can't wait to go spend money on a vacation because they got a refund. And now it's beneficial to some people who aren't good at saving because it forces them to basically put money aside for a later purpose. But at the end of the day, you're losing out. The government is holding your money, which means you're not holding your money. And anybody familiar with time value of money means you're not earning interest on the money that you could have had. So really, as long as you're good at planning out and anticipating having to eventually maybe pay taxes, it's better for you to have the money, earn interest on it, and then give it to the government as opposed to having them hold on to it for you when you can't even use it. Number four, I can get more deductions. No, you can't. A lot of people have called me saying, I got to find a way to pay less in taxes. And I'm like, well, what do you do for work? Do you have a W-2? They're like, yeah, I have a full-time job. There's nothing you can do when you have a W-2 to avoid paying taxes. You simply are getting paid an amount that's sent to the government by your employer. So they know exactly how much you're making. You know how much you're making, and it's pretty straightforward. So how do people actually get more in deductions? Well, it's because they own a business. And through the business, they're able to deduct things that you wouldn't typically get to deduct. Rather than you paying for lunch after tax, you're paying for lunch with company money because it's a corporate lunch. And by having it be a company lunch, you're ending up using company money, and the company can reduce that because it's an expense on their books. Now, obviously, this is where you have the gray line about what's deductible and what's not deductible. And again, that's why if you have a business, you talk to a financial planner or you have a good tax accountant that you work with to make sure that you're able to itemize everything that you possibly can and deduct everything that you possibly can. But at the end of the day, if you're just a normal person person, unless you own a business, you're not going to be able to get deductions. And finally, number 5, it shouldn't cost a lot to do my taxes. Let's be real, an accountant is not cheap. Most CPAs are probably costing at least $100 an hour, and at least if they know their worth. So there could be a guy that you could find that might be able to do your taxes for a couple $100, and he's just cranking out tax returns in his basement, but what's the quality that you're actually going to get there, and how much is he actually paying attention? He's really just cranking through data input to do something that you could have probably done on your own. For those of you that actually have more complex tax returns, it's worth it to have a CPA actually do it, somebody who is a tax professional do it, because you want to make sure it's done right and you don't have any issues. Again, by having a tax planner or an advisor early in the year, it'll save you the headache from suddenly having to deal with it next year when you're filing last year's tax return. The reason why accountants cost so much is also because it costs a lot to have the tax service and the infrastructure and all of the schooling that goes behind it. It might only take me an hour and a half or 2 hours to do taxes, so that would be, what, $150 if I'm at $100 an hour? Sure, but then you also have the cost of actually having the software, which costs thousands of dollars. So you need a lot of clients in order to justify the expense there and at least drop it down to a lower cost. At the end of the day, nobody who's really worth it is going to just do taxes and crank them out for $100 a pop, because it's not worth their time to do it. So I hope this cleared up some common tax misconceptions that people often make and mistakes that people have when it comes to thinking about their approach to taxes. If you have any common misconceptions that you're aware of, that you know about, leave it in the comment section below. And if you have any questions or want to reach out about anything, of course, you can find me on all social media at The Rapping CPA. And any topics that you want me to talk about, music videos you want me to make, you just let me know and I'll make it happen. Stay footed.